So you're considering implementing a three-fund portfolio using either Schwab ETFs or Vanguard ETFs and maybe one of those two firms as the brokerage. Well, I'm going to share with you my insight on the topic. We're going to take a look at fees and expenses, and I'm also going to share with you a brokerage firm that I think is a much better option for implementing a self-managed three-fund portfolio than either Schwab or Vanguard, but you could use the Schwab or Vanguard ETFs at this brokerage firm. So first, let's do a quick little primer here so we're all on the same page. What is the three-fund portfolio? Simply put, the three-fund portfolio is a portfolio strategy that uses three funds to get exposure to three asset classes. And those three asset classes are the US stock market, the global stock market, excluding the US stocks, and the total bond market. Okay, and you can get ETFs that represent either one of those asset classes from Schwab or Vanguard. Now, I actually did a much more in-depth video on the three-fund portfolio here, looking at what if you invested $1,000 per month for the last 30 years in the three-fund portfolio. And I share, beyond the actual performance of that $1,000 a month investment, I share a lot of other insight and detail. So if you want to hear more about the three-fund portfolio or learn a little bit more about it before investing in it, I would suggest taking a look at this video here. I'll put a link to it in the description below. So as I already mentioned, you can get these ETFs to create the three-fund portfolio from either Schwab or Vanguard, and they both have low-cost, low-fee options. And fees are very important. Here's another video I did. What if we applied a 1% fee to the best asset allocation? And I can basically summarize this by saying, of the about 40 asset allocations that are looked at in this report, if you took a 1% management fee on top of the best performing asset allocation, then you would have the worst performing asset allocation over like a 40-year period. So a 1% fee is fucking huge. Fees are fucking huge. Fees are one of the only things that we can control in investing, right? There's so many unknowns. We don't know anything really. The more you learn about investing, it's like the more you realize you don't know. The more you want to laugh at people that just keep talking like they know. It really is just a personal irritation of mine, but it really irritates me when people talk like, okay, well, if the interest rate goes up, then this is going to crash and that's going to happen. And it's like, says who? Oh, well, I know, I've done the research. It's like, no, if you've actually done the research, you know that may have happened before, but it's probably unlikely to happen going forward. So anyways, where was I going with this? I am totally drawing a blank. Oh, low fees. That's something we know and we can control, right? So we can control the low fees, so we need to take advantage of them as investors. Anyways, this video here, I look at that, and a 1% fee makes a huge difference. So low fee is important, but both Schwab and Vanguard have a low fee option. So let's look at the fees and the funds. We'll start with this one here, SCHB, which is Schwab's US broad market ETFs. This is basically their total US market. It's got an expense ratio of 0.3%. We'll compare that to Vanguard's total stock market ETF, just US. And I've said this before, they need to put the letters US in here, total US stock market. It is a little confusing. But their total US market, also 0.03%. 3 basis points is how we would describe that or pronounce that in the finance world. So same for same on US. Then with international equities, Schwab has an expense ratio of 6 basis points with their SCHF ETF. And then VXUS, which is the Vanguard Total International Stock Market ETF, has an expense ratio of 0.07%. So it's important to note, and I kind of want to point this out here, while it's basically established like Vanguard is like the low-cost leader because they're an investor-owned company, Schwab, Fidelity, those two companies in particular really compete with Vanguard on a lot of things, including expense ratio of the ETFs. So the Schwab ETF for international equity is lower than it is for Vanguard here. And then finally, there's bond SCHZ by Schwab, the total US aggregate bond, 4 basis points. And then with Vanguard, 3.5 basis points. So overall, if we were to equal weight this, we could say that Schwab has lower fees, but really it's an immaterial difference. Schwab and Vanguard, you really can't go wrong, or I'm going to say you can't go wrong. You won't go wrong using either Schwab or Vanguard funds. So then it really comes down to the brokerage firm here. And I do have an account with both Schwab and Vanguard. And what I will tell you about them is neither one really has a good user interface for facilitating this. So, if you were to implement this portfolio on your own, you would need to contribute, and break up your contributions into each little holding in percentages. And if you're doing this in ETFs, you may not be able to get these as fractional shares. I don't know. I actually did not check to see if you get fractional shares in either one of these firms. But I know at Schwab you can get some things fractional shares. I don't know about Vanguard, but most of the things that I'm invested in at Schwab I can't. But fractional shares are something to consider, but they're not the whole, they're not the whole kit and caboodle, so to say. Rather, the usability and the interface and the functionality to quickly invest in these, funds and in these asset classes at the right proportions is what's really important, right? You want to be able to do that easily with one click of a button. And for that, I'll share with you, I like M1 Finance because they have this pie strategy. So on M1 Finance, I shouldn't say strategy, it's really a feature. On M1 Finance, you set up your pie. So, you can just say, let's just make this simple here, 50% US equities, 30% international equities, 20% bonds, right? If that's going to be your asset allocation among these three funds, you just set it, and then you can set an automatic invest into your pie, or you can just come in and click a button into your pie, and it automatically splits your money up evenly into your pie. That is why, at that asset allocation, that is why I like M1 Finance for doing these three fund portfolios. And at M1 Finance, there's no trading fees. So you could use either the Schwab ETFs or the Vanguard ETFs. You could use other ETFs that are out there, but I really don't see a need to because I know that there's none that are really lower than Schwab or Vanguard. Maybe Fidelity or another firm I'm unaware of has some that compete with them on price. But yeah, it's not like you're really going to get any lower than that. Maybe one day there'll be a negative expense ratio ETF. That would be hilarious. And that might happen. It's not incredibly far-fetched. There have been more crazy things that have happened in the world. But for now, Schwab and Vanguard are the low-cost leaders. And yeah, I think that M1 Finance and their pies is a very, very effective and simple way to implement this. It's a much, much easier way to implement it than using Schwab and Vanguard's actual brokerage interface, because I have to say both of them are very poor. The other cool thing about M1 here is M1 Borrow in their margin rate. So you can borrow against your portfolio at a margin rate of 2% if you have M1 Pro, which I think is, M1 Pro costs like $100 a year. But if you're borrowing on margin, that's a small $100 a year for this interest rate saving. So that is a really fucking good margin interest rate. There's another company out there called Interactive Brokers. Interactive Brokers really caters to the institutional and financial manager side of things. Their user interface is absolutely horrible. They've got this application that you're supposed to use for trading, so it's not something you'd use really unless you're going there for the margin rates. But anyways, this margin rate by M1 Pro is lower than Interactive Brokers' standard margin rate. So this is really cool. I really, really like this. Now you might be saying, well, how can I use margin? Or should I use margin? Or isn't margin bad? I don't believe margin is bad. I personally use margin quite a bit to finance my business investments. I have this video on it here. Unfortunately, it hasn't got many views. I was really proud of this video here, but margin loans, I use them regularly. I explain how they work and how I personally use them. So, let's just say that you wanted to use it to fund your accounts receivable at a business, right? I own a business. I sell products on a terms basis, meaning I don't get paid for 60 to 90 days until after I've delivered it. So I've incurred my cost of good, and then I don't get paid for 60 to 90 days, right? So I've got a real high accounts receivable, particularly when we're growing. I can really be cash flow negative, right? If my accounts receivable is growing faster than I'm getting paid, to finance that, I use margin borrowing, and M1 Finance is one option for it. And I think that with that 2% rate, they're really as good as it gets. So they've got a lot of cool features like that. They do have some credit card and all that, but I really, I'm not mesmerized by their credit card, but the margin rate and the functionality that they have for the pie is really, really, really why I love M1 Finance. And that's why I think it would be a great idea to implement a 3-fund portfolio using either the Schwab ETFs or the Vanguard ETFs on M1 Finance. Guys, that's a wrap on this video. If you have any questions, drop them in the comments below. I'm signing off on this one.